After a spectacular bull run in the first 6 months of the year, the crypto market dropped by 35%. Is the crypto winter back? July was the month of correction and consolidation. The crypto market, as we already said, lost 35% of its value, and overall the July ended with a negative performance of 16%. Some of our clients called us and checked and actually asked us if we believe that the bull market has ended after such a substantial drop. And it is important to look at this drop in the broader context. Investors tend to get nervous when prices turn around and start falling, but this is a normal and healthy dynamic in the crypto bull market. We can take a closer look at the previous crypto bull run, which occurred from 2015-2017, and it actually lasted almost 3 years. In this period, there were 11 occurrences where the market dropped from 20 to 36%, and in some cases it took almost 4 months for the prices to recover. So it was very volatile during the bull market. 11 times the prices dropped. However, the market overall gained more than 11,500% in this bull run. So this is something really important to understand. The prices will go up and down. We will experience shorter and longer periods of sideways movements, but it is important to just stay put and hold, or hodl if you want. Don't do things that many investors try to do in this period. What they do, they're looking at CoinMarketCap, looking for the next hot cryptocurrency, which gained the most in the last, let's say, 7 days or maybe even 1 day, and decide to invest in it. What happens, of course, this asset will underperform the market in the future weeks or months, and if they do this often, or the more often they do this, the more money or the more profit they will leave on the table. So again, during the bull market, it is just best to stay put and hodl. One important thing when I was analyzing these previous crypto bull markets, I saw that the bull markets take longer and the rate of returns are actually getting lower. However, this current bull market is different. It has quite a substantial, let's say, appreciation, good dynamic. And when I decided to dig a bit deeper, I saw that it was actually the institutional investors who are the new force in the market. As you probably know, or if you don't, all the previous bull runs were actually driven by small individual investors. Institutional investors only started coming in during the last bear market, and of course even more during this new bull market, and they will continue to do so. Only the first ones really started tipping their toes. But this brings a huge amount of new demand to the market, and this will help with the prices in the future. In my last monthly commentary, I was also briefly talking about Facebook Libra and its impact, and I said it will have really immense impact of the broad awareness of the crypto, and I thought this will take a few months at least to start to gain some traction, but July was extraordinary. The US president decided to tweet about Bitcoin and Libra. US Senate had many sessions on the topic of cryptocurrencies. Wall Street Journal and many other big names published front page stories about crypto. So this was all effect of the Facebook Libra, which really is already helping the broader adoption of the crypto ecosystem. And yeah, this is something that is important to have in the mind. As the following months will unfold, there will be more and more discussions about the crypto, which will bring fresh demand to the market and help with the prices. So it is important to remember that market pullbacks are normal, volatility is normal, but we are in a bull market and it's best to just stay put. If you want to have a better insight into our thinking about the market, you can also read our blog, where I elaborate more deeply on the topics I just mentioned in this video, and you can also subscribe to our newsletter to be informed about any content that we produce as soon as it gets out. Thanks and see you soon, guys.